Hello and welcome to another article video. Today we're going to go over the article Master the Master Clock, Time and Price Trading Strategies for Success. As you know, well, if you don't know, if you're new to the channel, my name is Martin Maidan. I'm a finance professional and also a founder of a fintech startup company which calculates the future timing of markets in terms of swing days and in fact swing hours too, with a pricing model. So we're going over all the things that are really relevant to trading when we want to increase our hit rate by using two parameters. One's price and the other one is time. So if we can correlate them together, then more often than not we have a very good opportunity for a win trade, or if we do lose, it's a minimum risk trade. So our stop losses are very tight and our win rates are much higher than using any other method. And another thing is, which I've done a video on before, is that we are completely independent of news, and I will show you what that means as well, because recently we just had Israel bombing Iranian nuclear sites, and even then we knew the swing days when they were going to happen, and in fact I did give everybody a heads up, and we'll look into that as well. Without further ado, let's get started with the article and see what it's all about. Okay. Now, actually, if we think about it, timing the market has always been important, because if you can get your hands on news much faster than everybody else, you can trade with informed news. You can trade much better than having no news. So previously the whole world was all chasing news. Everybody wanted to know what's happening quickly or before the news, what the news is going to be, and accordingly we've tried to speed up everything with internet, with precision servers, and speed up our time of trading as well, like reducing it to like milliseconds and stuff, and trying to get in there as fast as we can. And that's been the whole process since the development of the internet, and in fact before internet as well. People always wanted to know what happened before everybody else, and so that they could trade accordingly before everybody else. And that kind of thing is also, there's a good example about that when Napoleon lost the war in Waterloo, and Rothschild in London, he got the news first that Napoleon did lose, and he could accordingly then trade the market before everybody else and make a killing on it. Now, the beautiful thing about the way we do timing and pricing is because we're preemptive. We calculate when the market will turn or break out before, with a high degree of probability, and that's the precious thing. Now, so what is market clock? So let's take a look at it. In fact, maybe I can make this a little bigger. Let's do that. Let me arrange that. So here we have a conceptual model that is going to map out for us the cycles of the market. Okay, and for this can be done for any financial instrument. For example, I'm looking at 5 assets basically: the 3 US indices, Dow Jones, SP 500, Nasdaq, Bitcoin, Euro, dollar, and gold. But we could actually do this for any asset that we wanted to do. So first of all, we're looking at the cycles, which should reveal to us when the reversals and the breakouts are going to happen. So if I know those time periods, I can align what's going on in that time period with my technical analysis, and I can be aware of which specific day the market is probably going to turn or break out. If I know those in advance, then obviously I can trade them much better. Much better being a higher hit rate of success, and also the money management can be much tighter, because if your timing isn't working, let's say you made a miscalculation, it didn't work, your stop loss is going to be much tighter. As I always say in the videos, if I've made a mistake in time and price, I don't want to be there, so I'm happy to take a small loss and get out. So this is really crucial for money management in the way we measure things. So why does time and price matter more than just price? And actually we can also say the regular news we're getting out there in the market. Well, first of all, traditional technical analysis, there are many ways to do it. At the GlobalTrader.Club, we look at 5-6 different ways of analyzing the market, because one specific way of technical analysis will not work all the time. So you have to have like a different perspective, and you've got to kind of like bring it together with that technical analysis. And price on its own is incomplete if you don't know when it's really going to make a move. And the whole issue of trying to solve that was by coming up with momentum indicators, right? People came up with momentum indicators so that they could actually get an idea when this momentum is beginning to pick up and it's beginning to occur, okay? And by having time on our side, what we can do is forecast when an asset is going to move, right? What's the low it can make? What's the high it can make? What's the probability that this is going to turn at this place? If we can increase that probability, because at the end of the day it's a probability business, then our money management is also going to be very much correlated to minimum risk and maximum return. This reduces false signals. You can time your entries and exits with greater accuracy and avoid over trading during dead zones, because if you know nothing's happening on that day, if that's not a swing day, or you're not following a swing day with a retracement, then there's no need to trade. You should be trading when there's a highly likely probability of getting a good move in the market. So the key time price trading strategies are pretty much, you can do swing day forecasting. So if your swing day technical analysis matches a swing day time calculation, in that swing day you can also have a trading hour correlation. So that's just like great, because it's working out with your technical analysis. There's correlation of price and time. The other one is time cycle. When you overlay multiple time cycles, and then what you can do, like for example, we're doing the intra-week swing days, which I'll show you in a minute. Intra-week swing days, and then for the intraday we've got the swing hours. So if you can match your swing day swing hour, then that is going to be obviously very valuable information, because you know when to trade. Also remember, the markets are 24/7 now with cryptocurrencies, so you can't be there 24/7, and you don't want to tire yourself out in front of the screen, because sometimes when you get tired you just feel pressured, like you want to put a trade in, and that can always go pear-shaped. Maintaining discipline and the psychological factors of trading are very, very, very important, and I've done a bunch of videos on that, and if you're serious about trading you should check them out, because you can solve all of those trader problems with time and price approach. Okay, then we've got the price clusters at timing window. So if I have a specific time window, a window of opportunity where I understand that this time is good, and then it matches my price and I want to go with it, then that is the place where you get in, and once you do, that's it. It's a bingo trade. And if it goes pear-shaped, like I said, sometimes we do make mistakes. Obviously your stop losses are going to be very tight. You can also see in many of my daily technical analysis videos that sometimes I do have trades open and they're very tight stop loss. Why? Because if I've made a mistake, like I always say, if I made a mistake on time and price, I don't want to be in that trade, because I don't know what's coming next. Okay, if you enter a trade and it goes in your direction, because you've got the trading hours in advance, you can see your whole day, week, in fact the whole month I give in advance, then you can see until where to follow that trade during the day as well. And that is also very, very important, because you can manage now trade not just with price but also with time, and that also reduces risk, reduces a lot of stress as well, because you can manage the trade, and if it's going in your direction, you know how long it's going to go that way. Now the other one is automated timing models, which is actually something that I'm working on also, because part of the fintech company, as you might know, automated timing models we're using now, developing now, to make sure that we can calculate the swing day for any asset. So we'll be entering data and values, and the software will just calculate it automatically as well. Now a lot of people talk about artificial intelligence and all using AI to do all this stuff. I don't think it's really necessary at all, because it's just maths. Okay, and you just calculate it, that's it. Now what are the benefits? Well, first of all, you get a much accurate trading results. Your results will be more accurate. You'll have a higher percentage of win rate, that's for sure. That's exactly what we've experienced as well. And also you're reducing your emotions in trading. Why? Because you want to stick around and you want to make sure that your time and price are correct. So you're not just forcing a trade simply because something is going on, all right, in the market. So you can wait for it. And also sometimes you get news and we'll have trading hours before the news or after the news, and that gives you actually a good setup opportunity, so you can get in before the news and you understand we're going to have a blowout, which actually we had one this week as well. With the news, the market had a good move up, and it was just, you know, and before the news we had a trade hour, so you can actually get into the market with your bias, you know, and have your setup beforehand. And better risk reward ratios, that is definitely true, because the stop losses are tight. Like I said, if you got the time and price wrong, don't be in there. You don't need to be, and you don't have to put a stop loss too far out. You can really match. Actually, if you're good at technical analysis and money management, you could use just timing, like many people in the club do. They just use the timing and they just see if it matches their technical analysis. If so, they're more confident in entering that trade. So there's a better risk reward, and there's also clarity in volatile markets, because if I know news is coming out, I know that something might be, you know, moving fast. If I've got a setup before or after the news, then that's it. I'm more prepared for the trade, because I know if I've got a pre-news trade hour, that's the hour we're going to take off from there. And if I've got one afterwards, that's the hour where I can follow the trade. It can pull back or it can go up and then reverse, so I can use those hours to go in the bias that I'm in as well. And then I also have normally the follow-up hours as well. So let's have a demonstration on that as well. In fact, you know, in this video I'm going to do the weekly wrap-up as well for last week. So let's go into the 9th and the 13th of June. What I'm going to do, I'm going to move this to this side here, so you guys will be able to see everything. I'm going to move my head to there. All right, I'm going to shrink it a little bit. All right, so we'll see how things pan out. Oops, let's come back down here. All right, okay, and we can do that too. All right, so let's take a look at 9th to the 13th of June. Now, the beauty about it is, as you can see here as well, I've posted the full month of June on the 21st of May. All right, and this week we had swing days for gold, euro, dollar, Bitcoin, SP 500, Dow Jones, Nasdaq, and we had the trading hours Monday, Tuesday, Wednesday, Thursday, Friday. As you can see, the daily videos get added on the day. All right, so they're not in advance, they're on the day, but everything else is in advance. Even the trading hours, these were all also posted on the 21st of May. So let's do a bit of a recap. So for gold, we had Thursday and Friday. All right, so those were the swing days, basically trading days as well. Remember, two things can happen. We're either going to have a push or we're going to have a reversal on swing days. So if we take a look at that, those are Thursday and Friday. Now, once we started coming upwards here, it was obvious that, you know, we're going to start going upwards. And also, if we have a pricing from the low here, you see how the PST pricing works out for us. The blue lines, the red lines, there's support, resistance, and they make targets as well. So as long as I'm on a level, this is the weekly chart, and I've got a price which is 3,309. If the market is keeping above that 3,309, you know, afterwards, after this actually push happened, we were like, okay, this is going upwards, so we can get in. Now the beautiful thing is, obviously when this is a bar up, you could say, well, you can tell it's going up. Yeah, of course you can tell you're going up, but how long are you going up for? Thursday and Friday. Also, what are your price targets? Because you want to follow them up into a price target. Also, you'd like to get in at the right hours. This is why, if you go to the 15-minute chart here, all right, so this is Friday, this is Thursday. All right, now on Thursday, this was a trading hour here. You can see from this hour the market just banged down onto the weekly pivot. Now here I didn't have a trading hour. The trading hours were here in New York. Okay, and in fact I had a trade in here which actually covered itself, but because my my stop losses are really tight, I got stopped out on the pullback here. But still, look at the trading hour. This is a trading hour, market pushing up, trading hour, market pushing up as well. Now also from the beginning of, or Tuesday I think it was, we'll see. I made a comment here. This is a heads up for Asia session Friday, okay? And I made that comment on, when did I make that comment? Let me refresh this, right? So that should be like, I think I did that on Tuesday, probably 3 days ago. So on the 10th of June at 2:55 p.m. my time, I made that comment. Heads up for Asia Friday. Now the 10th was Tuesday afternoon, right? So by Tuesday afternoon, on Tuesday, I already made a note to look out for it. And I did say here about Friday, 2:20 to 4 o'clock, if market turns, it can be pushy until those, and it can turn or continue either way. All right, so knowing this information is obviously important for us, because this is the Asia session, and look what happened in the Asia session. Now obviously this was due to the event that happened in the Middle East when Israel attacked the nuclear facilities of Iran. And when that, obviously I had no idea in May when I posted the trading hours that that would happen on a Friday. But looking at Friday, I was like thinking, okay, so this Friday is going to be like Asia setup. And this is exactly how it happened. As you can see, Asia, boom, going up. Now look at that. That's the 1 o'clock. So market's going up, steady sideways, slight retracement. And then with that 1 o'clock news again, 1 o'clock trading hour again on Friday. Where are we? Friday. 105 to 140. Remember, this is UTC +3, my time zone. All right, I'm on the Mediterranean coast in a nice city called Antalya. And it's UTC +3, and that is it, 1 to 130. That time period ends, market turns around, okay, going towards our target. Remember that 3,385 was a target there when the market was down here, so we hit that target. 3,418, 3,450, all targets coming from PST, okay, so it's all honky-dory as we go along. So once you understand that, knowing the hours to get into the trade is also important, because let's say you missed it, right? Let's say you're sleeping in the Asia session. Let's say you're a Londoner, or let's say you're trading the New York session. If you're trading the New York session, wouldn't you want to be up a little early, okay, and get in if this thing eventuates? Now knowing that in advance is great, because you're like getting up early for it, because you knew when the market was highly likely going to turn. So that is an amazing piece of information, because in New York, when New York opened, you see you got a bigger, got a bigger margin here, okay, and then you obviously know how far you can go. You got a target as well, 3,450, and high of London gets swept, does a retracement. Still, we should do that 3,450 probably next week. All right, so knowing the days in advance is obviously helping us out. Let's take a look at euro dollar as well. Now for the euro dollar, I had Monday or Tuesday, and then I had Friday. So if we take a look at daily, that's your Monday, Tuesday, right? So I originally thought in the beginning of the week that we might be going down from here because the market came up. So, you know, going down is like logical, okay, but the market didn't go down. So on Tuesday, it's still hanging around here, and the market broke to the upside. Now, once it breaks above the high of a swing day, because Monday or Tuesday they both were, then you know you got an upwards move going on. Then you still got your targets with the PST level. So the hours as well are very important, okay. So on Thursday you can see trade hours here. Let's take a look at Thursday and Friday. That's your Friday, 1 to 130, market dripping down right here. So for example, here the market's turning downwards, and the earlier hours were, remember, 220. That's your 220 there, and then we had 440, didn't we? There, that's your 440 time period there, and the market also just turning around after a bit of a crisscross going down. If you had entered here on this bar, your stop loss should have been just above the daily pivot on that day. And on Thursday, let's take a look at the hours. So we had 5:55, 7:10, 7:30 in the morning. So 5:50, that's 7:10, 7:30. 5:55, 5:55 is pretty much, yeah, that's your 5:55 there, and that's your 7:10 there. Okay, so that's your zone. And then what else did we have? Thursday, 8:50, 3:20. So 8:50, where are we? 8:50 is there. Market comes down a little bit. Once it breaks out, 3:20, that's your 3:20 there, right on the bar, and the market doing a reversal, 3:20. Then we've got 5:25, 5:40. Let's see, 5:25. That's 5:40. So the market comes down into that time period. If turns, it should push first into 8:10. So it's turning a little bit later, but I don't think it's reversing. So it comes into 8:10, which is that bar. 8:10 may continue to 11:45. From here, market turns around. Not a big turn, but remember, these are intraday hours. 11:30 there. All right. So turn around here. Still no turnaround on that one, but a big push into there. Then the market turns around, going into Asia. Asia market setting up and just crashing down. On the Dow Jones, now remember, you also have to match these, not Dow Jones, SP 500. You've got to match these to your technical analysis. You can't just have time, okay? You've got to have time and price together. If you don't have them together, it's saucy, you know, it's a little bit tricky. Because if you just have technical analysis and time, like I said, you're trading with one leg. With SP 500, Dow Jones, and NASDAQ, we had Monday or Tuesday, and Monday was common to all three of them. And then we had Friday, and because Friday had Dow Jones and NASDAQ had Friday, I also said SP 500, you know, is a swing day for SP 500 as well on Friday, which is also a note I did on somewhere here. All right, when I did something about SP 500. All right, I think it was that one, SP. Yeah, that's the one on SP 500, which is actually a trade I took on Thursday. But the swing day was Friday. Now, from the beginning of the week, I said, guys, there's a gap here which we should, you know, we would like to fill and then sell off. And when the news of the Israeli attacks came, that actually went to the PST level, that gap level, sorry, not the PST level. And then it just shattered down. And this is the trading hour here. That trading hour pushed downwards. Now, I said two things you can do on this one. You can either sell on the 37.5 off the impulse on that one, or 37.5 off the impulse of that one. Okay, so on this one, 37.5, the market sold just a little bit, nothing interesting, went to the bigger picture and then sold off. This was a trading hour. This was not a trading hour, but the breakout was a trading hour. You can see the market broke out exactly at the trading hour. Now, on Fridays, I don't work. And unless there's something like really hot, I normally don't trade on a Fridays because the weekend, you know, it's the weekend and so on. But at the end of the day, the hour, Asia setup, knowing in advance that Asia was going to have a setup is already like giving us a heads up. Even if you have trades open, if you know that there's going to be something tricky happening at a certain hour, you know, you might want to make sure your stops are in place. You might want to make sure you're on top of your trading and so on. So this big, huge spike up and then comes down. Now look at Thursday trading hours, okay, which is what I had taken advantage of, because the market came up and I thought to myself, you know, selling the highs is not a bad idea. Obviously this happened, okay, and then the market came down. So the news did impact it, but the reason I had a tight stop loss, like I always say, is if I know something crazy is going to happen, you know, why take a risk? I am known for keeping positions open overnight, not a big deal for me, but as you can see, I calculate when crazy things have a highly probability of happening. So that's that. So same thing, technical analysis, market moving up, want to sell the trading hours. Obviously this didn't work and that didn't work either, and that does happen. Like I say, it's not 100%, but it's tight stop loss. And at the end of the day, there were only two locations we could have sold. One was right up here where the market did actually sell, and the other one was here where it did a bit of a retracement but didn't really stick in there. It kept pushing up a little bit, and it's logical as well that it did push up a little bit because you can see it closed the gap here. So if you're a bit, if you know technical analysis, then you understand that these gaps are likely to close, and if they push down afterwards, after they've closed it, that's exactly the kind of trading, timing, pricing you want to be looking out for. Okay, the same thing, we can take a look at Bitcoin as well. If you're watching the videos for Bitcoin, I've been saying all the time, if we're at the highs, we should be selling. I'm not in favor of buying highs. So on swing days, if we are at highs, I'm like, I'd rather be sell. My bias would be to the short side at the PST levels, at the trading hours as well. Now look, Friday was a swing day. Look what happened here. Market bounced up right from the low. Okay, so knowing that is a bonus. Okay, so here once again we have a breakout to the upside. Market comes into there. Okay, and I did say either wait for the swing day to happen, or if you're going to do something, sell the highs at PST levels. Knowing the PST levels in advance is obviously best way to trade. Also on the daily setups, if you're following the videos, you can see on the daily setups that these will change as the market conditions change. It'll give you PST levels where you can sell off from. Normally I mark them in with these vertical, with these horizontal dashed lines, and when time and price correlate, those are the times when you want to be selling off, as you can see. So on Thursday, let's take a look at what happened on Thursday again. All you got to do is match your hours with it if you're going to trade it. So let's say you're in the New York session, 325.25, 320 is there, and then you got 525 is there, and then you got 10 past 8. That's your 10 past 8 is on that bar. It's a 15-minute chart. Market makes a slight move up and then sells off into 11:45. 11:45. So knowing the hours is a place like you can follow it to time and price together. So using time and price to enter trading is one thing, or you can use them to target as well. Now if you're selling, obviously this is in the middle of nowhere. This is not a good place to sell because you're not at a high to sell. The market's coming, the market came down, so you don't want to be selling low. All right, this is what the GlobalTrader.Club, we're always talking about, selling if the market retraces up and then down, especially that 37.5, which we always talk about. So if the market did make a fall, okay, as you can see, the market comes back 37.5, okay, pretty much with our timing. So this zone is a sell zone. You can also do this whenever market comes up. You can wait for a U-turn. Okay, you know how to do a U-turn. You could wait for that as well, not a problem. Okay, and just follow through. This is the Asia session, Friday. Let's get rid of that. 220. All right, so having heads up, 220, bang down. Friday. Now Friday was a swing day for Bitcoin. What does that mean? It means at a low we can buy. Okay, because the market has come down into Friday. So if it came down into Friday looking for a buy opportunity is not a bad idea. So we had 4 o'clock and then 1 o'clock, so that pushy, and this is your 4 o'clock. As you can see now, that is a PST level. So the market does a PST level, probably on the weekly, I'm guessing. So somewhere there must have been a PST level there. All right, if I put the line there, maybe on a 4 hour, I'm not sure. 103, 140, 190. Okay, same old. So time, price, and that's the only time you can like trade with a higher probability opportunity. So the market's going up. Or also when the market crashes down like this, most people are really scared to buy. So if you know you've got a trade hour matching a PST price or a technical analysis level, going long here with a tight stop loss is a good high probability trade. And then the market, as you can see, has gone all the way up again before kind of like coming back down. So if you take a measurement of that as well, where the market kind of sold off, once again 37.5. okay, so match it to any price and time. If it matched the time as well, that would have been awesome. 9:15, I don't think we had one there. This is Saturday. All right, so 9:15, 9:15 is right there, and the market goes back up again into 37.5. okay, so when you're measuring those things and then you're correlating it to your time, your trading is much better. If they do not match, okay, sometimes they won't, like here, you know, nothing matches all the time, but you know, if they match, it's a great trade. If they don't match, let it go. At the end of the day, this is a strategy. So matching time and price works really good more often than not. The same thing for anything, Nasdaq, Dow Jones, whether you're also trading any asset. You could do the same calculation, measure it, and that's it. For example, here on Nasdaq, you see we had the targets from beforehand. We had these targets before, as you can see that PST level 55. The market did that on a Friday, and it was 21,456. So we already knew 21,456 is right there, and it's done it right on the dot. And then the market takes off. What time does it take off at? Where's that? 4 o'clock. That's your 4 o'clock. Why? Because Friday we had 4 o'clock. You see, 2:20, 4 o'clock. If market turns, it can be pushy until 1 o'clock. It turns. Is it pushy until 1 o'clock? Well, let's see. Well, that's 1 o'clock. So yeah, I mean, we've come up into 1 o'clock, nice and easy, okay? And then that's how it is. Market again, one more time, take the low, take the high, 37.5. Market sells off. If that had matched the price, just nail it, bang it. Sometimes it may not, like I said, but okay, so knowing these things is the way to go. Now remember, Monday, Tuesday and Friday on the indices, I'm okay to sell the highs, and this is why I'm like, you know, Monday, Tuesday, like I want to sell, okay? And this is what happens on a Friday, big push down, because we had Monday or Tuesday and Friday. So knowing those are the swing days, if you're at the highs, you're looking to sell at a good price, which is for us a PST or your personal technical analysis level, not a problem. But this is how it is, and this will work with any asset that you want to calculate at. Now sometimes the hours of the day work for some assets and it doesn't work for another asset, because obviously they're different assets, but overall those are the hours that you focus on, and this is why we're correlating time and price. So when you correlate them together, then it's like, you know, good. Like for example on Friday, I had one guy ask about gold, and he said, you know, look, I've missed the Asia session, okay, because he's in Istanbul. And then he said, you know, what do you think we should be doing? I said, if it comes back into 130, then go, you know, you buy it. and you got to follow it to like 3,450 zone. So as you can see, the minute that time period is over, the market's turned around, gone into that 3,450, just a few bucks shy, which is okay. You can't be spot on all the time, but you understand, you can lock in profits and so on. That 3,450 is still on the radar. We're still going to hit it, but not everybody's got the patience to be waiting for Monday if you're trading on a Friday. So once you've done that, once you go in, you got your direction, you've probably covered your trade by then, because this is what I always do: cover the trade, let the rest run into the target, and if it doesn't go to the target, anywhere near is also okay, or you can wait for Monday. I normally don't keep anything open over the weekend. It's tricky, but that's how it is. Okay, so knowing the hours in advance, and also if you can match them to your technical analysis with your PST level, for example, it's great, because if anybody's using the PST, when this was happening, okay, so we add these lines together, as you can see, right? And also we would have had either that or that. All right, so those two lines are giving us a price level up there. Okay, we're always trading with price. Now if time and price is working, you are right at the bottom of the market on that wave, because PST is giving you a price. It's not a wiggly line, it's a price. Okay, so you hit a price at the right time. So be at the right price, be at the right time, and then that's your goal. All right, so I hope that helps. I've only got a few more, I think, videos to do on this one, because, and after that, I don't think I've got any other topic to cover. I've got 1, 2, 3, 4, 5 more videos, and once I get them out of the way, I think the whole video series for everything related to time and price will be done. And as you can see, I've got all the topics that a trader can possibly want to use, including all the problems and so on that traders go through. So 5 more videos and that'll be done. Have a good weekend.